Hey, let's take a look at stock options and how to trade them on the Robinhood app. So here on ATVI, so that's going to be Activision Blizzard. If you're looking to trade options, I want to break this down kind of in a different way than most videos do, just because it took me forever to figure out what an option is and how they are actually executed. So I'm going to walk you through the basics, and then I'm going to walk you through kind of how to execute a trade on Robinhood, and then also the different ways to do so. So if we're on any stock that allows you to trade options, you'll simply click on the trade button here on the bottom right, and then trade options. So that's going to bring up pretty much exactly all the different option chains. If you're familiar with option chains, I'm going to keep this as a very basic level video. But as far as the top, you'll see the discover and then different dates. So those dates mean the expiration of the contract. Again, keeping this simple, the expiration basically means, do you think the stock is going to go up or down before that date or on that date? So if I'm clicking on March 1st here, the first one, you're going to see that it comes up with all this confusing information. Let me break this down for you really quick. So options are basically a speculative trade, which basically means you're guessing or betting that the stock is going to go up or down in price by March 1st in this case. So in the middle of the screen here, you can see it says share price at $41.64. That's the price of the stock currently. So basically at this point, you're betting, do you think this stock and its price is going to be above or below $41.68 on March 1st? So if you're guessing or betting, the way to really say this in simple terms is using the betting method. I'm going to bet that this price is going to be here, or I'm betting the price is not going to be here. So breaking that down, if you see on the top left hand, we've got our buy and our sell options. So basically buying is saying that I believe or I bet that the price will be a certain place. If you click on sell, that's saying I don't believe this price is going to be at the specific price that's listed. So don't worry about call, don't worry about put. We're focusing on just buying and selling right now. Buy means that I'm betting that my money is on this stock hitting that price. Selling means I do not think that the stock's price will be at that certain price point. So that's kind of the basics there. So let's say I believe the stock will be at $42 by March 1st. We'd simply do a buy, and then we'd click on the $42 call here just above the price if we believe that it was going to be at $42. If we did not believe that the price was going to be $42, click on the sell, and that's saying I do not think that the price will go up to $42. So that's buy, that's sell, that's saying I believe, I don't believe. Now let's talk about the right hand side. So we've got our call and our put. The easiest way to remember this is thinking of your cell phone. You pick up your phone to make a call, right? You're bringing the phone up. That means the price is going up. We believe that the price is going up, or we believe the price is not going up. So anytime we're doing a call, it's because we're thinking that the price movement, again, if we're at 41.84 now, a call is saying that this price will go up. If we believe that it's going up, we're going to buy a call. If we don't believe that it's going up, we're going to sell a call. Now, this can get a little bit confusing, and this is where a lot of people have to watch this video. Feel free to pause it, rewind, take notes, whatever you need to do. But a call is basically saying that the price is going up. Don't worry about what you think it's going to do. We can talk about that here in a second. Then think about a put. A put is, using the cell phone analogy, it's the opposite of call. A put means we think we're going to put our phone down. We ended the call, the price is going down. So if our cell phone's going down, we're putting it down, the price is going down. So now putting it all together, let's say that we think that Activision is going to be going up to, let's say, $43 by March 1st. So if we believe it, that means we're buying. And if we think that the price is going up, that means that we're going to click on call. So for $43, we think it's going to get to $43. We can get into the little nitty gritty here, but the $43 call, that's where we think the price is going to go. Below that, you're going to see break even. Basically, it's $43.14. So that means that's where the price would have to go for you to break even on this stock. So talking a little bit more, obviously this thing's changing a little bit as we're going because this is a live price chart. But on the far right hand side where it says 15 cents, that's how much the contract per share is. So options always work in 100 shares per contract. So if you see the number on the right, you're always going to times that by 100 because again, 100 shares, 100 shares at 15 cents each. That's going to bring this up to $15, well now $14 since the price has changed. And then in the middle there, you're going to see to break even percent. That basically means that the stock has to go from 41.83 up 3% to break even. Then any profit is going to be made after that. So just because you're buying a $43 call does not mean that you're going to make money if it hits 43. It's going to have to surpass $43. So we can talk about that in a different video, but just want to show you how to quickly execute one of these trades. So again, if we believe that the stock price is going up, so believe means buy, and we think it's going up, call, we're picking up our phone to make a call, then you just click on this option chain, and then you'll simply click how many contracts you want. Robinhood makes it very simple as far as contracts times 100 shares, like I was saying. So each share, and again, this is an active price chart, so it just jumped down to 13. But yeah, times whatever that share price is times 100, and that's what your max cost is going to be if you're believing that this stock is going to go up. If you don't believe that the stock's going to go up, there's two different ways to make money off of this as well. Say you don't believe it, you don't believe that it's going to get to $43, you'll sell a call. So you don't think that it's going up. So there's different ways to look at this. Selling a call, I don't believe the stock price is going up. It's going to be the same way to execute a trade. You click on it, you put in how many contracts you want. One thing to be mindful of is time decay and a couple different factors as far as you're going to hear the options Greeks. I'm going to put up another video talking about those more expert points. Again, I want to keep this video very basic, but just a quick overview. Buy means I believe it's going to that price. Sell means I don't believe it's going to that price. Call means I'm picking up my phone to make a call. The price is going up. Put means I'm putting my phone down because I think the price is going down. So hopefully that gives you a little bit of a visual, some sort of memory cue. Really quick, I'm going to go to the Discover tab here on the top of this option. Robinhood makes it very simple. Again, reviewing this, I want to make sure you guys know the basic level, but Robinhood breaks it down even more. I think it's going up or I think it's going down. You have these options here in the middle of I think the price is going up, which is, again, it's going to be buying a call. We just talked about that. We think it's going down. That means we're buying a put. We believe the stock is going down. And then there's the, not every stock has these, but these are basically the different straddle and strangle and iron condor strategies for options. So those are going to be the two options here on the right in the middle of the screen. But I think the option could go up or down, which basically means that this stock's highly volatile. Basically, to break this down, really simple, is a straddle or a strangle basically means that you're buying both a put and a call. And then also here for the iron condor, that would be selling a put or a call because you think that the price is going to stay relatively the same. Again, I don't believe it's going up. I don't believe it's going down. And then with the straddle or strangle, I believe it could go up. I believe it could go down. So you're buying at that point. So hopefully this video makes sense for you guys. I want to make it super simple. If you guys need some more visuals, I can animate this video and put in some fun highlights and all that stuff, slow things down and make this super easy. But give me some likes if this helped. If it didn't, let me know why, or if you're still confused how I can make another video.